So today I spent an hour looking at Sofi and seeing if the stock is currently a buy. Like I said, it's only about an hour's research, so there'll be a lot of people that are invested in Sofi that are watching this video because I know it's been a very requested video in the comment section. So that's why I'm doing this video today. But I know a few of you guys that potentially are watching this could potentially have a lot more knowledge in this company, this space, and done a lot more research than me. Like I said, this is about an hour's research that I've done on my findings into Sofi and when potentially I could find this stock a buy. So I know it's highly requested, so I hope you enjoy it. Make sure you smash the like button and we'll take a look at Sofi. And just a shout out, yesterday I did a deep dive into Revolution Beauty. It was around about 25 minutes long. It took me over 3 hours to put that video together through research only, not including editing, uploading, thumbnails. With that included, it was probably around about a 4 or 5 hour video, and it's one of my worst viewed videos out of the last 10 videos, which is absolutely devastating. It's always a bit of a nightmare when you do all that research and that video turns out to be one of your most poorly viewed videos. So if you've not watched it yet, please go give it a view, because there was quite a few hours research put into that deep dive, and I always think those are the most videos with the most value in, and yeah, they just not really seem to be picked up that much nowadays, which is a bit frustrating. But yeah, please go watch that anyway. That's what I was trying to say. But getting on to Sofi. So Sofi is currently down at $5. It is a 5.4 billion market cap company, and you can see here it came on the stock market around $10, and it did hit the 52-week highs of around, well, it says down here $24, and since really November time, when we've kind of hit this kind of stock market crash that we've been going through, which when you look at it from that point of view, it's nearly getting towards a year now we've been through a stock market crash. And for small caps and mid caps, we know that that's actually been a bit longer than November, but really the big market crash has been really recognised since that back end of 2021, and that's nearly coming on to a year now, which is absolutely crazy. So fair play if you're still sticking through it. There's been a lot of people that have come and gone since that time and not made it through the other side. And since that time frame, Sofi has gone through $22 all the way down now to $5.91, and it's down 74%. And we've seen a lot of growth stocks doing this, so not much of a surprise here. And it's worth pointing out, Sofi did come through a SPAC. It came through a SPAC valued at 8.6 billion, and as we can see now, it's now down at 5.4 billion. And Sofi is a personal finance company or a fintech business, and it's been found, it's there. August 2011 is when it was founded, and it provides financial products for including student loans, also loans, refinancing mortgages, personal loans, credit cards, investing and banking through both mobile app and desktop interfaces. So as you can see here, very diverse income streams. They're in a lot of fintech spaces, and that's what the big thing that Sofi claim to be, is that one shop that does everything for financial services. So we're going to go through the investor presentation here and see what they are doing, or what they say they're doing, and just point some of the key slides out here. So you can see here they're claiming to be the tech disruptor, and you can see here that Amazon and what I did here, and Tesla what I did here, and now it's Sofi's time in the financial services, as you can see here, claiming to have a 2 trillion opportunity. And you can see here, this is some of the points that they offer. So like apply for money, open account, buy it and sell stocks, deposit checks and access cash, pay a friend or a bill, and also how they're trying to be a unique, more easy to use platform, available at all times, any platforms, and a very simple platform to use is with the key drivers here. And you can see once again the kind of circle they have of services that they offer on this business. And here you can see a timeline of the products that have been launched across the last few years. So the money part of it, the invest part of it, the home loans, in-school loans, credit cards, and when they came onto the stock market through this investor presentation, you can see here the Sofi rewards that was launched at that point of time. And here you can see the goals that they were trying to achieve through the long-term revenue growth, as you can see through here. And they're still expecting in the next few years to still have a high percentage of growth. You can see here the adjusted EBITDA point of view, where they're expecting to get to positive EBITDA in 2021 and move into 2022 with positive EBITDA. So straight away I thought, okay, this is an investor presentation from I think a year and a half ago. So let's have a look at our management achieving what they're setting out to do, because we've seen this quite common with a lot of SPACs, is they come onto the stock market, they have high promises, do they deliver on what they said they were going to do? There's a few companies out here, or a few SPACs here, that haven't really, or a lot of them I would say, haven't achieved what they set out to do when they came onto the stock market through a lot of these investor presentations. So let's have a quick look on their recent earnings. So they were expecting, a year and a half ago to get around about 1.5 billion in revenue, which would have been 53% growth. So we'll go on the recent earnings. The recent earnings were pretty positive, really. They did have an EPS beat. The impressive thing was actually the revenue. The revenue was quite a big beat on 11 million, and they did raise their financial year 2022 guidance, as you can see here. So management now expects full year 22 adjusted revenue to be around this range, up from this previous range here. Now you can see here, this isn't really a massive increase. It is a slight increase, so it's only a couple of million. So the raise in outlook wasn't massive, so we'll just call it 1.5 billion. And if we do flick back to this previous presentation, 2022 1.5 billion. So yeah, they're basically hitting what they expected to do on revenue. In fact, they're just slightly above it. But yeah, so that's obviously pretty impressive. Now on the adjusted EBITDA point of view, if we go to 2022, they're expecting 254 million in adjusted EBITDA. And if we go back here, you can see they expect adjusted EBITDA to be 104 to 109 million, up from previous. So they did hike it up, but when we do go back to the previous investor presentation, you can see here that they are slightly behind the adjusted EBITDA forecast that they had here in the presentation. So they are pretty much achieving what they set out to do in the point of revenue. Very good growth here, 50% revenue growth. They are a little bit behind on the adjusted EBITDA point of view, but not too bad overall. Now, there's a lot of moving parts in this business, like we said. When you look at SoFi Money, that was up 92%, Invest 89%, credit cards, impressively, was up 227%. That's insane growth that they've got there. Relay, which is 115%, at work 117%, and total financial services products up 100%. So this is a key area to watch, because this part of the business here, you can see they're in a lot of areas, and some of them have been growing really impressive at the moment. So really important to keep staring at this finance part of the business, because this seems to have a lot of growth right now, especially that credit card growth was pretty impressive. If we do have a look at the loan part of the business here, you can see here there's a bit of a mix here on the growth here. So you got home loans with 39%, personal loans with 31%, and student loans with 10%, meaning the total lending products is up 22%. So this is clearly a bit of a slower part of the business at the moment that's growing, but still, it's not too bad at all, and they're very diverse here, which is great. So a lot of different parts of the business here do offer quite exciting growth. It is looking like, in particular, this personal finance area is the place to be watching, because some of the growth that we saw here is pretty impressive. Like this SoFi Money area is growing at really good rates, especially when you look at the invest part of the platform. 89% is crazy, and the credit card growth is crazy, but unfortunately that does make a little bit of a lower part of the business up at the moment. So hopefully that can carry on growing at these sort of rates and make a bigger part of this business up at the moment. Now, there's not too many metrics we can use, because they haven't been on the stock market for a very long time here, only just over a year after converting through a SPAC. They do trade at a 4.5 price to sales ratio at the moment, according to Simple Wall Street, and they do have a gross margin of 76%, which is a really good gross margin as well. So that's pretty impressive. They've got good margins there. Which you probably would expect for a fintech business. When you look at the financial part of the business, you can see here the growth. Let's go on the past performance actually. You can see here that really since that 2020 period, when they started to introduce a lot more of the credit cards, a lot of the investing part of the platform, that's been driving a lot more growth to the platform, as you can see here, which has been an explosion here. And the future growth is still looking really positive, as forecast in their investor presentation. And analysts do tend to agree as well. There's still quite high amounts of growth, as you can see here, probably around about 30% revenue growth, which is pretty impressive. The only concern here is that you do have a business that is losing a fair bit of money. So you can see here 500 million loss, 300 million loss here. By the end of this year, 378 million loss, and the year after, 205 million loss. Analysts are projecting the forecast profit by 2024, so potentially profitability in the next 2 years. But you can see here they're still going to burn through probably around about 600 million in cash here, so that's something to be very careful of. And when we look at the balance sheet here, There is a bit of debt to equity. You can see they sit around 68% debt to equity, which is okay. You would expect probably some debt on there for being a finance company here. They were really kind of safe with this SPAC because that did help pay down a fair amount of debt. So something just be careful of there. When I do look at the cash balance though, it is 707 million. Now I don't know if that's the most up to date cash balance, but at 707 million, considering that we just talked about here that they're probably going to burn through 600 million, and I do look at this and think that's to move from 378 million in loss to 205 million and then to go to profitability. I don't know if analysts have been a little bit too bullish here. That's a massive reduction in the amount of losses that we're taking. Potentially someone that's done a bit more research will know why that potentially is. Potentially they're doing something in particular that will reduce massively and that will lead to profitability. But when I look at that, that's a fair bit of cash burn through. And when you look at the cash balance, and it does sit around, 707 million, that cash balance is going to go really, really low. And that's taking into context that potentially they turn to profitability in 2 years. I think they would have to probably raise capital. I don't think they'll be doing that through share dilution. I would expect them to probably take that on through debt. So that balance sheet could get a little bit worse. That's something to kind of consider here. And when we do look at the business here, you can see here that in the ownership point of view, I was quite surprised to see that a business that was founded in 2011, that recently came onto the stock market and being in such a growth stage, had pretty limited ownership inside the business. The person that has the most ownership inside the business was the CEO, who has a 0.4% stake in the business. Now, there have been, as you can see here, as the latest numbers from Simply Wall Street, they did increase the position by 17%, which is positive. But I was surprised to see there was a lack of insider ownership inside the business, which was a little bit disappointing. So when you look at the business here, the amount of products they offer is really impressive. And you can see here that when they are offering all these products, and if people carry on staying on the platform and use multiple products on the platform, that is going to be very successful for Sofi. When I look at the business, especially that fintech part of the business with the investing side of it, the credit card side of it, the personal finance side of it a bit more, I think that's one of the key areas to make sure that carries on growing at the rates that it is doing, because that could be a major driver for revenue in the next few years. When I look at Sofi, is it a buy for me? At the moment, it's a little bit too early for me. I look at the business here and I'm seeing a company that's losing 300 million, potentially 200 million next year. When you've got 700 million in cash as well, it's a pretty low cash balance here, which means they're probably going to raise capital at some point. I'll want to see how they do that. I want to see the growth carrying on. I want to see them be able to move to profitability. That's a massive push to profitability in the next few years. So I would be very much staring at that path to profitability in the next 2 years, because the longer that goes on, it burns through the cash, that balance sheet gets a little bit worse, and they're not very gifted with that amount of a good balance sheet or a lot of cash on that balance sheet. So for me personally, there's a lot of interesting stuff on here. I'm keeping it on a watch list. For me, I would have to wait probably until the back end of 2023. When I get to the back end of 2023, I would probably assess how that personal finance part of the business is going. Is the growth still there? Assess, are they moving to that profitability? What's that balance sheet like? What's that cash on hand like? And I know a few people will say, but it's an amazing opportunity here now, especially at $5, 3x sales, and potentially you could be right. But for me personally, I always like to see there's a path to profitability with the businesses that I invest in. And at the moment, the path to profitability hasn't been proven just yet. And I would wait a year just to see that develop a little bit more. So it's definitely an interesting business. They've got a lot of good stuff going on here. For me though, it's just a little bit too early for me to be buying at. So I'm going to keep it on a watch list. I'll see what happens. I'll probably come back to it in maybe a year's time. But yeah, that was what I kind of got through Sofi when I did a bit of research in it today. So hope you enjoyed the video anyway. If you could hit the like button, and that'd be absolutely amazing. And I'll see you in the next video.